I mentioned before that short-term holder supply has ticked up just a little bit, long-term just down a little bit. What is going on there? So this particular metric is actually a really, really powerful concept called the sell side risk ratio. This is actually one of my favorite metrics. It was invented a couple of years back. Really, really brilliant construction and very, very simple. The logic is when a coin is spent in profit or in loss, it means it's moving or it was spent at a price that is different to its original cost basis. Now, the larger that delta, if someone's realizing a very big profit, we're going to take that number. If someone realizes a very large loss, we're also going to take that number in absolute value and just look at how much is the total profit and loss locked in compared to the market cap. Well, in this case, we're looking at it for long-term holders and we're comparing it to the realized cap. So another way to think about this, for the long-term holder cohort, how much profit or loss was locked in compared to how much wealth they have invested in the asset. So how much wealth do they hold? And on any particular day, what is the change in that wealth? That's the way to think about this metric. So for long-term holders, high values generally happens in bulls. We get the occasional spike here and there for capitulation events, but generally speaking, high values happen in bulls because they're taking huge profits. They're distributing their wealth. So not only is the numerator, the profit going up, but the denominator of their total wealth that they still hold decreases because they're spending it. They're literally expending their coins. Now, low values happen when the opposite is happening, where they just simply aren't spending. They are waiting for a different price, usually for the long-term holder cohort, a higher one, before they start spending. So what we can see is a very, very similar kind of long, slow grind where it finally starts to trend higher and then away we go. Same in 2017, into 18, into 19, comes 2022 and away we go. We are in that same slow grinding bottom formation process. We had a bit of an uptick this week. It's starting to get to that point where things are turning around. So again, this is a long, slow view. Lots of long-term holder metrics typically are very big picture view, but this one here helps us just kind of navigate and understand where we are in that macro cycle. If we zoom in on the short-term holder cohort, this is where it gets a lot more interesting. This is certainly a more volatile and a more noisy metric because this is like the hot ball of money that's chasing the price the last 5 months of supply. We get these much more significant spikes. A way to think about this version of the sell-side risk ratio is low values signify volatility is coming because everyone who is going to take profit and everyone who is going to take loss has now done so. So price has to go somewhere to motivate the next round of spending. And you can see that we reached an all-time low on this metric right before our rally to 35K. We had a significant amount of coins jostling around that had no profit or loss in them. It was just kind of coins at the same cost basis moving around. This has now broken to the upside. Profits have been taken on this rally higher. So what we're seeing is that rally, that move from 30 to 35, it did in fact motivate spending from the short-term holder cohort. And we'll see this in a bit more detail in a second, but that is an important metric to watch. That's that behavioral shift. Pretty much through all of 2023, there's been a reduction in their spending from that profit and loss perspective. We've finally seen a bit of a break of character. Now we'll see if this holds a higher level, which would indicate sustained profit taking, or if this starts to cool off and it's a bit of a flash in the pan, but it indicated that volatility was coming and volatility did indeed show up.